Hello, good afternoon. You're watching Closing Trades on 80 now. It's the last hour of the working week, and it looks like it's going to be a week which isn't ending too good for the bulls because we are tracking the worst week for the Nifty since almost October of last year. For the mid cap and the small cap, it's the worst week that we have seen since December of 2022 actually. So it's been a couple of years that we haven't seen this kind of slide in the markets in a week itself, and it is, yes, off the lowest point of the trading session for the day, but for the week we are clocking losses, and for now the Nifty is below the mark of 22,000. Nifty Bank under pressure below the 47,000 mark, firmly so, and the mid cap and small cap indices in the red. Sectorally as well, there's no major trend as such apart from the fact that OMCs are under a lot of pressure given that price cut that the government announced, and auto is also on the back foot, the likes of M&M, Hero MotoCorp, etc. But I'm not sure why. Maybe I should have worried about the competition that might come in because of the latest policy that the government has announced on e-vehicles, and that's something I think we'll probe further as well.
Well, yeah, absolutely. The fact that the government has approved to promote India now as a manufacturing hub for EVs, a lot of question marks it actually throws up. So let me take those points forward. Hormaz Sarabji, the editor at Autocar India, joins in on the show right now. Hormaz, hi, afternoon. Good to chat with you as always. And, you know, Hormaz, this is exactly what Tesla was asking for. Do they now get a green signal? Is it a go-ahead? Should we assume that this is going to mark Tesla's entry into India?
Absolutely. I think this is what Tesla was wanting. And clearly, if you see just 15% duty on cars with a CRF value to $35,000, they're not very expensive cars if you look at where EVs are. So I think this actually what it will do, it will accelerate investment from a lot of multinationals. Now, Volkswagen has also been thinking of investing up to $1 billion in EVs. This might accelerate that because then a whole bunch of their CBUs will be at a very attractive price. And other OEMs as well. You know, there's even talk of Ford looking at coming back into India with EVs. They've also, that just rumors about that. That's still some time off, but this could really accelerate a lot of multinational investment in the EV space. But I'm not sure how good it is for the current domestic players vis-a-vis Maruti, Mahindra, and Tata, because clearly, their high-end vehicles will compete in this price point. So that I don't think for them it's been a great announcement.
You meet a lot of OEMs who have plans on the EV side and expanding footprint in that side. But what are your observations as far as the ecosystem on ancillary services around it is concerned? Is that also coming up in equal measure, or that's lagging?
Absolutely. You see, there were basically three hurdles for EVs. It was price, range, and the charging infrastructure. Price, people have got an appetite for it. And once you're hooked onto an EV, you want to keep driving it, because what people don't realize, they're fantastic cars to drive. Very smooth, very easy, no noise, stress-free, that sort of thing. The range isn't too much of an issue either, because typically they are used in city environments. Charging infrastructure has turned out to be the absolute single biggest hurdle. And really, it's falling way behind the adoption and demand of EVs. In fact, I think a lot of people who haven't secured charging, or most people who haven't secured charging infrastructure at home, don't end up buying an EV. And this really is a problem, especially in cities. Not everyone has access to home charging. And that doesn't look like it's improving, as rapidly as demand should. So I think that's going to be a huge hurdle. And that's one of the biggest reason why EV sales are sort of flattening out.
But Hormaz, you talked about Tesla, that this is pretty much a red carpet which has been put down for them. What about BYD? Do you think they can also get approvals under this? And also, what would it mean for the local players? Do you think they would compete in the same value zones that the current companies, M&M, etc., have their portfolio in? Or do you think this will cater to a completely different market, and hence these companies shouldn't be worried about too much competition?
Well, I think you have at the lower end, you've got Tata Motors, which is at a very kind of, a low end of the market over there. But then you even have MG, and now with JSW, they're going to make an announcement next week what their plans are. They can also take advantage of this, with pricing their CBUs very, very competitively. Now, we know how competitive the pricing is in China as is. I mean, the recent BYD Seal, which was launched at 41 lakhs, expensive in absolute terms, but if you see the spec, you see the performance, it's an absolute steal. Now, you can imagine that with just 15% duty, how competitive that would be. It would eat straight into the market of the domestic players. There is Mahindra, which are planning a whole range of SUVs at the higher end, and looking at their specs, they will be in the 25 to 30 lakh bracket. So there is going to be let's say competition over there, and severe and really serious competition. As far as BYD and the Chinese go, I think JSW and SAIC have shown there's a backdoor entry where if they partner with an Indian OEM, approvals do come through, and it's already come through for JSW, investing into SAIC. So that there is a backdoor entry for the Chinese to come. I don't think they can come, absolutely 100% on their own, the way MG Motor did when they first came. Obviously, we know what the issues are, and a lot of geopolitical issues, kind of being a dampener for a lot of the Chinese companies. But I think it's great for the consumer, actually. It's absolutely fantastic. I think charging infra really has to improve. It's really a huge problem. I don't think, that's really being addressed on the war footing it should be. And even the discoms, power supply in certain areas, it's all really needs to be sorted out. But I think, for consumers, the prospect of getting some really high-tech, cutting-edge EVs at a very good price, nothing could be better for the consumer.
I'm sure you're going to be the first amongst those who's going to test drive a India-made Tesla, right?
Yeah, look forward to that. Well, they'll have to fix a lot, because the last ones they had, the ground clearance was terrible. So that's the first thing they'll have to raise and get that sorted.
Okay, and I'm sure they're making note of that. Good chatting with you, Harmaz, as always. Thanks for taking the time out.
Thanks.
Okay, let's move on. Let's understand the construct of the market. By the way, M&M is down about 3.6%. Let's see what Tata Motors is up to, because definitely there will be competition in the segment if Tesla were to make entry into Indian EV space. These stocks are lower, as is the case with the entire OMC pack. BPCL is now down almost 6%. L&T is down about almost 2%. Some of the other heavyweights like ICICI Bank, Reliance Industries, Infosys, Axis are also under pressure. But we've definitely lifted off the low point of the day. Kunal, hi, afternoon. What's the sense that the market is giving you? Some more pressure in the days to come?
Yeah, some more pressure, but I think just to put it into terminology, the earthquake had already happened a couple of days back. It's the aftershocks which is happening, because the advanced sector issue is not very bad, like what we saw, I think, day before yesterday, when the sell-off was almost at 1:7, 1:8, and more in favor of declines. It's still 1:1 broadly for the advanced decline. You see many of the stocks which have made their short-term bottoms have seen a bounce back. This time around, the only difference in terms of the technical scenario for the indices is that the Nifty and the Bank Nifty, they have come back to their previous swing lows, but the mid caps and small caps are still higher than the previous swing lows, which was made 2 days, 3 days back for the indices. So that could be a sign of some sort of divergence on the positive side coming back into the indices.
Interesting. In fact, small cap, mid cap indices have flattened out. Today it's the reverse of what happened. The small caps are coming back faster, large caps are still lagging. Nuresh, what's your take on the market? What are the stocks you're watching out for today? In fact, Reliance and HDFC are not participating on the Nifty. Is that the reason why it's lagging?
So what we are seeing is, say we hit a new low during the day. We went almost 200 points down in the Nifty, but we did not see a low for the day on the Nifty small cap or the mid cap indices. That tells you the market is digesting yesterday's and day before yesterday's correction on the mid cap and the small cap indices, and slow recovery is there. On the index, we continue to see one day up, one day down for a lot of sectors. So yesterday IT was doing well. Today it is the major contributor on the downside. Reliance was holding on the last week. In the last 2-3 sessions, Reliance has taken a knock. So we are not seeing any strong follow-up in the heavyweights. We just see false starts. So HDFC Bank came above 1460 levels, but has not seen a follow-up price action strongly. We had Axis Bank come closer to 1100, 1120 and again falter. So we are seeing a lot of false starts in heavyweights, but the trend as of now, we are in a consolidation. 21,600, 800 on the downside should be a support for the Nifty, and 46,000 roughly for the Bank Nifty. It's only when we start breaking that when trend changes. So for now, stock specific moves continue. Copper as a commodity has breakout, which generally indicates a bounce back in all the metal names. So that looks interesting. So Hindustan Copper, Tata Steel could be bounce backs from here on.
Break on that note. When we come back, more stock-specific stories, and of course, Amisha Vora from Prabhudat. She will also be joining us right after when we return. Let's take the discussion forward with Amisha. Amisha, good afternoon. Last few days have been pretty rocky as far as the broader markets are concerned. Talk to us about which other areas your clients have been nibbling and you've been recommending them to buy.
So I think, after a very long time, the correction looks a little broad-based. And correction seems to have just started. So I think that this phase of volatility and a little more correction will continue for a couple of months at least. But in the meantime, we are continuing to have our view intact as far as BFSI is concerned, and as far as capital goods is concerned, our weak outlook on consumer continues to be intact. As also, we think that within BFSI, segments like life insurance or insurance will come back, and selective pharma also will come back.
Right. Amisha, hi, afternoon. Good to have you on the show. And what really struck us was your opinion about broader markets. Why do you think that the correction has just begun and it has more legs to go?
I think, for quite some time, the sentiment was very intact and the correction was shallow, and this was not so broad-based. If you see what happened in last 1 week or 10 days, was a very broader correction across market cap, of course less in Nifty, but of course across market cap, and number of advanced decline was also very sharp in favor of declines. Once a time like that comes, most of the people, their portfolios, their positions, their exposures gets realigned. There are M2M related issues. So once that sets in, it takes a little time for things to then stabilize, and then the bull market to resurrect, or the advance to resurrect. I would say bull market is intact. It's a correction phase, but the things to restart typically takes a little time.
So it'll take time to restart and reboot that, bull market, which has taken a bit of a pause, if at all. But Amisha, is it the best strategy right now to maybe go towards defensives, go towards large cap quality names and just hide in that?
So I would say that for some time, and even now, being with large cap as an exposure little higher than before would definitely help. And within that also, we have, as what I mentioned, some select sectors which we think will do better. And curtailing exposure, but not finishing, just curtailing a bit in mid cap, small cap would help. But overall, if you see next 3 to 5 year perspective, I think the mid cap, small cap rally has still many more legs, maybe more selectively than what happened in the past. You can say with more diligence and more judiciousness than what happened in the past. But the fund flow is very strong, and it will start giving those legs to the rally again sooner than later.
So essentially what you are appearing to be is cautious in the near term, but on a scale of 1 to 10, not seen you so cautious or defensive in a very long time. So this is a change of stance. Would you also tilt your portfolio in favor of defensives, just to have your position also where exactly what you feel the market could do, more IT, more pharma?
I wouldn't do that, because I still see that in the economy, the firepower continues to be reasonably very strong. If you see any key numbers, whether it is automobile numbers, whether it is the air traffic number, whether it is the hotel occupation number, occupancy numbers, many such indicators that you see that the economy continues to show good strength. It is, I think, more to do with the valuations that the correction is set in. And the best part I still feel is that any such rally which got aborted in the past a decade or two was the time when the corporates were also getting over leveraged and they had a lot of debt on the balance sheet. But this time, if you see, the rally is totally equity linked. So most of the corporates with this SME, MSME, micro, small, large, medium, all have bolstered their balance sheet with capital, and that too equity capital. So I don't see that things are going to really stop and it is any kind of a big bubble, but a corrective phase in the markets was overdue to set in and it can remain for a while.
In terms of a trigger, what do you think is going to play out next for the markets? Because we've got the advanced tax deadline, you've got the Paytm issue as well playing out, part of the details already out on the electoral bonds, and come tomorrow we'll have the election dates as well out. You think now the narrative and the focus of the market would largely be split between perhaps elections and earnings?
Yeah, one thing is more important, that you will have your March year ending. That always has a little bit of impact on your tax payments, liquidity, and so on. And beyond that, during elections also, a lot of Achar Sahitas will be there in terms of new orders, etc. So that's why combining everything, I think that might be market will go into a consolidation phase. But this cannot really disturb us. And of course, the underlying assumption is that the election results will be positive to the ruling government. Beyond that, if we go, we will have a little bit of monsoon coming in. So maybe just post-election, pre-Diwali is the time when things will start looking very robust again.
Okay, so a bit of a cautious stance coming in that at least for the immediate term, that easy money has been made. It's going to be a lot more difficult. You have to do a lot more bottoms-up approach to make sure that you put your money in the right places. Thanks, Amisha, for that sage advice in this kind of market. That's the verdict for now. But let's quickly take the BDSC ideas, or the closing trades idea rather, with the technical experts. Naresh, what's the closing trade today?
So that would be a buy on Britannia, which has been consolidating around the same prices for the last 2-3 weeks, given a short-term range breakout of 49.95,000 levels. So could see some move towards 5150, 5200 in the short term.
Britannia hasn't moved quite a bit, but clearly Naresh is expecting higher levels. What about you, Kunal? What's the closing trade idea?
So that's on Hindustan Copper. Looks attractive. 2 days of very strong recovery for the stock from 230, 235 to now 270 plus for the stock. Looks attractive from a short-term trading play.
Okay, Hind Copper hold because the stock has already moved up 11% yesterday. Today as well, it's in focus. Kunal is recommending a hold on that strategy. Time now to slip it to a very short break. Don't go anywhere.
Head equity that Anand Rathi is joining us now. Varun, afternoon. Varun, I'd like to take up an issue which market is discussing right now, and that is the price cuts. The fuel price cuts which have come in, they've been on the lower side of what the market was estimating, but the street punished these three stocks nevertheless. Just 2 minutes back, my colleague is telling us that IOC chairman is saying that probably more cuts are possible if conditions allow. So pull up the intraday of BPCL and I'll tell you what exactly. At one point in time, it was down almost 7-8% and then started recovering. In fact, halved that losses. Now that they are opening the window still for further cuts, how do you think these stocks are right to be taken up, to be bought again, or not right? You'll get lower levels later.
Yeah, hi. Thanks, Irina, again for inviting us. Just to mention about the cut, I think it was quite lower than what the street was expecting, right? ₹2 cut as such on fuel is nothing that we saw. And this has happened after a very long time, after 18 months that we've seen. So this kind of cut, I don't think so will bother the street too much. As regards the stock reactions, the way they were, I think it happened across PSU pack. It wasn't only to do with OMCs. I was just looking at stocks like BHEL, BEL, ONGCs, etc. Even an ONGC, which is an upstream, which should have benefited today, considering crude was up and valuations being extremely attractive. Still, the stock was down significantly. So I don't think so. It's only the reaction of the fuel cut. But yeah, I see chairman mentioning that there could be some more cuts which can happen depending on the situation. Means that say if crude has to come off, and if that's how I am seeing it. If crude has to come off, then they might pass on some more benefit. That's about it. But we don't see any material concern on these stocks from here. And we have to remember that these stocks are extremely attractive in terms of valuations, right? So yeah, would remain very bullish still on HPCL, BPCL, and apart from the OMCs, we remain extremely constructive on upstream companies particularly. We are very positive on ONGC. So yeah, thank you.
Within ONGC and Oil India, any particular choice?
See, we are positive on both of them. You have to look at the valuations for the kind of ROEs that they do. ONGC does about 16% plus ROEs, is trading at 5 times earnings, 4 times EV EBITDA, 0.7 times book. Valuations are extremely attractive. I think there's no better bet today in the market than ONGC. I'm very, very constructive on ONGC and Oil India both.
Right. Varun, hi, afternoon. Also wanted to understand the view on the overall sentiment across the mid and the small caps. Does it seem like the weakness could have some more legs to go and we could see further downside from the current levels?
See, we are extremely constructive when it comes to small caps. Mid caps, we've seen a very sharp rally, and rightly so. If you see the earnings growth last couple of quarters of mid caps were roughly upwards of 35-40%. And that reflected in the way stock performances were. If we see small caps, they were slightly lower. They were about 14-15% for last couple of quarters. But going forward, we are very, very constructive on small caps because we see at least a 26-27% kind of CAGR for next couple of years in the small cap names. Also, when it comes to multiples, if we assign, say, reasonable multiples currently, what we are getting is at least a 40-50% kind of upside in the small cap index basis the 2-year estimates which are there. While in mid caps, we see a 14-15% kind of upsides with a 2-year perspective. So we're not that constructive on mid caps, but yes, on small caps, we are very constructive, very bullish.
Okay, so that's the view coming in on the small caps. Just taking stock of what's happening in terms of the individual movers, it's the PSUs which are actually doing quite well. Take a look at Cochin Shipyard up 11%, Gujarat Pipavav is up around 10%. You also have other defense plays, the likes of Solar Industries, etc., seeing a bit of a bump up. What's your view, Varun, when it comes to this defense PSUs vertical?
Yeah, we have been mentioning about this before also when we were there at your channel. I think any narrative which has been there of the government, not only defense but also power and any other narrative which they have been having where they have been focusing a lot, we expect continuity there. Considering the fact that there is growing consensus that you should see continuity in the government side also. So if that is the case, these are the best place to be in. Defense names have been doing extremely well. India has gained a lot of ground. We keep seeing they winning some order or the other. Yesterday, BEL had one of them. So we remain very constructive on these names also. Yeah, defense is a very attractive space to be in.
So I want to do a chart check with Kunal on Nuvama. Kunal, just check out in the last 5 minutes, we've seen a massive rebound coming in. 10% is what Nuvama Wealth is almost went to and come 6.5 still. Look at the last 1 month chart. It went to a good corrective phase, almost 3,800 and a rebound in the last 3-4 days from there. How does it look right now?
Yeah, it's a decent chart, Ajay. Over the last 1 month, since the correction also, it's been a very mild kind of a correction from 4,450 odd levels towards 3,800, 3,850 mark. That was the low the stock had made. a couple of days back for Nuvama, and from there it's come back towards 4,200 mark, which means that when stocks generally correct by a margin of 10-15%, and if they come back towards a 50% retracement of the correction in just a matter of couple of days, we tend to expect that these are the stocks which would eventually come back and break past their previous swing highs first, then many of the other peers. So I would believe that this seems to be a strong chart. Now that the 4200 level is broken, which is a 50% retracement of that 500-600 point correction, the next target should be on the upside, which is around 4500 plus.
Okay, in the meantime, what is actually getting undone is that slight bit of recovery which played out in the entire OMC pack, be it BPCL, HPCL, IOC. They're all now falling more than 5.5% apiece. Naresh, quite a breakdown of sorts for the entire OMC pack. You sense further pressure or shorting opportunities perhaps?
Given the announcement as well as the fact that the rally was pretty huge. So if you look at HPCL, it went from 250, 300 all the way to 600 levels. So a dip back to 430 is what I would expect as an entry point. So for now, we've come down to 460, 470 zones. So the last swing low was around 420, 430. So another 5-7%, they become buys. And structurally, it's been a long-term breakout. So the last time the stock was at such level was 500 back in 2017. Same is the case with BPCL. The stock had broken out above the 550 mark before. So 530, 550 would be a good entry point. So for now, watching out for another 5-7% downtick, and that should be a buy area for the whole lot of AMCs.
Last 15 minutes of the trading session, a lot of rebalancing was expected today. Let's try if we have Somit to join us to talk to us about what that FTSE rebalancing flows would do, because there were a couple of other adjustments that were going to happen. Okay, we'll try and get that soon. But in the meantime, let me take a look at some of the other buzzers. Shree Cement got a recent upgrade as well. So let's take stock of what's happening to that stock. Is there a reaction on that one? Because Citi has actually upgraded the stock. The target price is now 30,000 rupees. So it is seeing a bit of a jump up. Of course, the fact that the valuations have become attractive and the fact that they're expecting double-digit volume growth in FY24 and 25 is something which is supporting the sentiment on that one. What's the view on cement pack as a whole, Varun? And are there any favorites within the sector?
So yeah, long-term basis, 12-month plus, we remain very bullish on cement also. But in a near term, with say a couple of quarters view, we remain a little negative on a tactical basis. We don't have a positive view on cement right now, considering the fact that there have been price cuts which have been happening. You have elections coming up, so things will slow down in terms of infra activity. And finally, you will have monsoon after that, right? So we believe that there has been a good enough rally in cement. This should consolidate or correct a bit in the next couple of quarters, and then probably you can see the rally resuming again. Yeah.
Naresh, check out Force Motors. In the last 3 days, the stock fell to almost 5,900 and come back almost 65 plus in 3 days alone. Pull up the 7-day chart or maybe 1 month chart. What are the levels to watch out for in Force Motors?
So for now, what we are seeing is the trend has been pretty strong for the stock. It was outperforming even when the markets were correcting. So for now, 6,000 actually becomes a stop loss, and crossing above 6,900, which is the recent swinger of the last 2 sessions, it actually becomes a momentum trade going forward. So the strength is there in the stock. So it's a hold at current levels, now stop loss at 6,000.
Okay, that's the take coming in on some of these buzzing names. In the meantime, let's also address what's actually holding out. And Hillstart Copper definitely has been one stock which has been really raring to go. I think yesterday as well, it closed in with almost a 10% gain. Another follow through coming in here. 3% higher is where that stock is currently in trade. Federal Bank, Ambuja Cement, LTTS and ABFRL has been right on top there amidst the liquid movers. Almost a 3.5% move is what Aditya Birla Fashions has actually seen. Kunal, you track ABFRL pretty closely, right? Map the charts for us.
Yeah, so I think after a bit of a shakeout in between, the stock is managing to make a comeback from 200 levels. In fact, sub 200 is where the stock has tested 3 or 4 times in the last 1 year. Mid of 2023, the stock spent a lot of time consolidating at the sub 200 levels. I think 180, 185 was the low the stock had hit at that point of time. And then, it gradually moved on to that 250 plus levels. But then in this, recent leg of correction, the stock retested the 200 levels approximately, managing to make a good bounce back from current levels. So which means that potentially the stock is ending a time-wise as well as a price-wise corrective phase. 200 could now be kept as a good short-term swing support, maybe on weekly closing basis. So in case if the stock in the next couple of weeks holds on to that 200 levels and doesn't close below this level, I would believe that we could probably get into a decent bit of a bounce on the stock.
Okay, just wanted to mark M&M. I think that policy that the government has announced has clearly spooked the street with respect to the electric vehicle plans that M&M has, because that stock is now down a good 5%. We did speak with, of course, Hormas, and he said that it's not only the high-end category which will get impacted, but M&M was going to come out with a few products and the portfolio which was tilted towards that range, which might compete with the likes of Tesla, etc. as well. But of course, the biggest talking point right now is, of course, what's happening to the OMCs and the kind of price cuts we have seen. But the big question is it the end of the road, or there could be more such price cuts on the anvil? This is a question that my colleague actually posed to the managements of all marketing companies as well as the minister, and he's joining us live. Prakash, tell us what exactly was the answer. What did the body language tell you? Is there an expectation of further cuts, or for now, this is it, the 2 rupee cut?
Yes, before answering this question, I clearly say that there is a confidence within the government and the oil marketing companies, because we have asked this question to the oil minister and IOC chairman as well. Oil minister, while answering this question, has said that he'll be requesting oil marketing companies to take further cut. At the same time, this question has been asked to the IOC chairman as well. He was standing just beside to the oil minister, and he asked whether you like to cut more, like to get provide more benefits to the consumer going forward. He said, if there will be reduction in crude oil prices going forward, then there will be possibility to cut prices in the petrol, diesel going forward. So yes, he has he has not ruled out any possibility to make further reduction. He has said that if there will be reduction in crude oil prices, then the oil marketing companies can provide further relief to the consumer. They can cut prices going forward. But at the same time, he has also said that there'll be not much impact on this price cut. I mean, rupees 2 rupees reduction in petrol diesel prices, which has been announced yesterday. He said that the bottom line of the oil marketing companies are intact and is not going to impact to the large extent. But yes, there is a possibility. It's an election season, and despite facing losses on diesel, they are under recovery on sale of diesel. Oil marketing companies have decided to take a price reduction in petrol diesel. That's the situation at this point of time. And yes, there is a possibility that the oil marketing companies can take further price cut going forward.
You were also listening to the IOC chairperson as well, right? If you could just reiterate for the benefit of our viewers, what exactly did he spell out?
Yeah, that's what I'm saying, that we asked this same question to the oil minister and IOC chairman. Oil minister at the same time has said that everyone should welcome this move, that the oil marketing companies have taken a very courageous decision. While facing losses on sale of diesel, they are having under recovery around rupees 5 per litre. Despite of that, they have decided to cut prices. So he has welcomed this move. At the same time, he asked the same question to the oil minister. I mean, and what I'm saying is that oil minister has asked this question to the IOC chairman whether they would like to cut prices again. He said that yes, there is a possibility if the condition in the international market allows. If there will be reduction in crude oil prices going forward, then there is a possibility to cut prices again. So IOC chairman has not ruled out the possibility to take further price cut, further reduction in the oil, petrol, diesel prices going forward. So there is a possibility, because we are in election season, and oil marketing companies have decided to take price cut despite having losses on sale of diesel. So there is a possibility that the further reduction can be seen going forward in retail prices despite having losses, because the freight charges have gone due to Red Sea crisis issue. Again, they have decided to take a price cut. So there is a possibility that the consumer can get further relief going forward, and oil marketing companies can cut in petrol diesel prices again.
Neatly summarizing that for us. So that's a verdict coming in. There's a possibility. What happens, of course, depends on a lot of external factors, including crude prices, etc. But that's a developing story that we are watching out for. But take a look at Relaxo Footwear and bring up the intraday chart of that one, because that has suddenly spiked as much as 13%. The company has announced a recent tie-up as far as the athleisure segment is concerned with one of the companies, and the flash will come up for you on the screen, because that seems to be an important development, because the stock is mighty excited right now. Kunal, on the charts, would you want to recommend anything?
Yeah, so I think after such a steep run, it's very difficult to recommend a buy because the stock has, I think, engulfed what 2 months of price action. From 15th of Jan, the stock was almost at 900, and slow and steady, the stock had fallen down to 800 levels. So it's managed to recover and come back to that 900 levels, which means 2 months of correction just got undone in a matter of one trading session for the stock. So that clearly tells that this is a strong, powerful move, and this could mean a strong reversal on the upside. But then buying the stock at such steep prices may not be a prudent strategy. We'll wait out for a correction. Maybe closer to 870, 875 could be a better buy.
Right. In fact, we have the IOC chairman soundbite as well. Let's hear out what exactly did he say.
It's a very dynamic world. Crude oil prices play a very critical role. So we'll wait for the crude oil prices, how they are. And once the crude oil prices show some trend, whether it is going to be stable or volatile, then we'll take a call.
Is your under recovery on diesel?
No, I'll not be able to answer that offhand. But ethanol 100 at this point of time, as the secretary said, is a signaling issue. We are sending us, it will be matched with the petrol price at this point of time.
The verdict coming in from the IOC chairman as well. They can't comment about the under recoveries, but nonetheless they're talking about how the price cut will impact them a bit. But Varun, since we still have you with us, I just wanted to go back to the footwear segment. Today they're very excited because, of course, there was an initiation as well by DAM Capital suggesting an upside of anywhere between 15 to 30%. There's this latest announcement from Metro as well. What's your big view on the footwear stocks? Because for the longest time, they did nothing. For 6 to 10 months, they were just sideways. Do you see a bit of a reversal of sorts here?
Yeah, so honestly, we have also not heard of any recovery so far. So our checks are on. Too early for us to comment here, but things are not picking up really on this side. And honestly, retail overall across India has to pick up, which has not been the case. So we will wait and see how the footwear part grows from here.
Right. Okay, Varun, great to have you on the show. We'll let you guys go on that note. Kunal, Naresh as well, thanks as always for taking the time out and joining in. It's definitely been a bit of a damaging week. Actually, you know what? Before I thank Kunal and Naresh, let me just quickly get in some BTST trades as well. Kunal?
So that'll be a buy on Wipro. I've been bullish on the stock over the last couple of days, expecting the stock to get into a breakout of a 4-week consolidation. So a buy with a target of 550, stop loss at 500. And HDFC AMC is something which is popping up on the radar in terms of a breakout. The stock potentially closing in about the 3,800 levels. So would suggest a buy with the target of 4,010 and stop loss at 3,700.
Right. Naresh, what about your BTST strategies?
So first would be a buy on Britannia, which is on verge of a breakout, seeing some ticks on the FTSE reject. A revised stop loss at 49.50, target price of 5,100. Second is a buy on Bharti Airtel, new all-time high here. Stop loss at 1,200, target price of 1,250.
Right. Okay, let me now take it across to Vinny and find out how this extremely painful week, at least for the small and mid caps, is winding down. Vinny?
Absolutely a painful week, and we'll be seeing that at least the Nifty is going to be closing in the red, though it managed to touch some high levels at one point of time during the week, but today ending on the red note as well. Friday not great for the Nifty50. Even the small cap, surprisingly there after such a tough week, we're seeing the small cap is going to be closing on the green note at least for the day, but for the week overall, yes, we're seeing a decline that is there. Mid cap on the other hand, not much, recovered from the day's lowest point today, but still going to be closing in the red. Let's look at in terms of the Nifty Bank as well, where that will be closing. Nifty Bank almost seeing a slight bit of a recovery, closing down 0.3% in trade. What's exciting this week is Nifty IT. That's been the one that has been in the green this week closing the week on a green note as well. Though today a bit subdued is what we're seeing for the Nifty IT. But like I said, for the week, we'll be closing on the positive side, up almost 1% that we could say for the Nifty IT. Advance decline ratio today clearly in the favor of declines versus advances, and that's been the trend this week as well. Nothing exciting that happened on that front. Nifty Metal as well as Nifty Autos are among the top sectoral losers as well. So let's pull up something like a JSW Steel. Whether you look at JSPL, what are they doing in trade as well? They didn't do anything great as well. Today also ending on the negative side as well. Other than that, what we're seeing exciting is that when you look at companies like TCS, L&T Tech, all these will be positive for the week at least, and TCS obviously managing to hold on to gains of almost 2/10 to 3/10%. L&T Tech obviously did have the order as well, to managing to close on with gains of 3% as well. Let's pull up Relaxo Footwear as well as what Campus Activewear are doing as well. Relaxo Footwear today clearly saw very sharp gains coming in, 8-9%. We did have a brokerage note initiating coverage on these footwear companies. So Relaxo Footwear, Campus Activewear, as well as when you look at it, something like a Metro Brands, let's pull that up as well, what that did in trade, as well as Bata. All these stocks too we are keeping an eye out on in terms of the footwear. Other than that, what we don't see very good trends coming in for was the realty sector, and that Nifty Realty also is a big among the top losers for the week as well. So for the week, Nifty Realty clearly been under pressure. We had seen a very sharp run up coming in those realty names before in the last couple of months, but now the trend seems to be changing, and Nifty Realty clearly under pressure for the week, down almost 10% as well. Top losers also would be coming in, something like a DLF, Godrej Properties. All these names clearly saw a bit of a pressure today in this space as well, and for the week also saw a decline as well. As of now, today, none of the sectors, are closing on a positive note. They all managed to give up those gains that we were seeing. So let's keep an eye out on that. Nothing exciting on that front as well. Let's pull up some of these small cap names today, and which were actually managing to hold on to some bit of a gain today. In the small cap side, we have Cochin Shipyard, SJVN, as well as IDBI Bank. Those were the ones, those were holding on to very strong gains as well. So yes, keeping an eye on that. That's how the market is closing. Nifty IT for the week on the positive note. A very volatile week that we've seen coming in the markets.